Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. The dollar collapse is pushing silver prices higher. Excess money supply has been like miracle growth for gold prices. So, this article from Seeking Alpha will be in the description. It's going over a lot, and I think you guys and gals will enjoy this video. So smash that like button. Make sure you subscribe because I post daily videos. So there's a clear correlation between the annual growth rate in M2 money supply and the price of gold. Global ETFs backed by gold hit an all-time record in the first quarter, attracting 298 metric tons or $23 billion of inflows. The global $10 trillion plus stimulus effort will have a noticeable impact on the prices of goods and services, which could be constructive for gold. The best way to gain exposure to gold is through precious metal royalty and streaming companies such as Franco-Nevada, Wheaton Precious Metals, and Royal Gold. And that's if you're looking at the ETF side of it. I highly recommend investing into the physical metal. The $2.2 trillion coronavirus relief package that President Donald Trump signed into law on March 27th is just the beginning. The Treasury Department is now seeking some $250 billion more to replenish small business loans, and there's hope that the president and House Democrats can agree on Phase 4 spending deal. On that, they may target infrastructure. Trump has asked for $2 trillion, and that's just the U.S. We're on a think of it on a global scale. According to Evercore's ISI's Ed Hyman, as many as 285 stimulus measures have been announced around the world in the past 8 months, the most ever by a wide margin. Japan, which only this week declared a state of emergency, approved a $1 trillion relief package on Tuesday. Last month, I predicted that at least $10 trillion would be spent to mitigate the economic impact of this virus, and it appears as though we're already there, much more to go. This is all long before considering monetary stimulus in a form from 0 to near zero rates of quantitative easing, also known as QE. The U.S. economy is being flooded with excess money in liquidity right now, compared to the same period a year ago. M2 money supply, which includes not just cash but also savings deposits, money market funds, and other near money, has increased some 12% in the most in 10 years. Money supply flowing into gold. All this excess liquidity has to go somewhere, and historically, it's acted as miracle growth for gold prices. Look at the chart below. There's a clear correlation between the annual growth rate in M2 money supply and the price of the yellow metal. In the times when money supply surged from the same period a year earlier, gold prices followed. It looks like a mirror almost. So the blue line is the M2 money supply, and the gold line is obviously gold price per ounce. It's very, very similar. You can see all the way back to 2010. You can see in 2011, really high, and we're getting back up there. Gold touched its all-time high of $1,900 an ounce in 2011 when M2 money supply growth soared above 10% year over year. With supply growth now at 12% and likely headed higher, liquidity has flowed into physical gold as well as paper gold. On Monday, spot gold traded above $1,700 for the first time since December 2012. The next test, I believe, is $2,000, and I said before, $10,000 gold isn't that crazy. It really isn't. If you want to talk about crazy gold prices, well, we're living in crazy times, ladies and gentlemen. Gold ETF inflows smashed records. Global exchange-traded funds backed by physical gold notched a new all-time record in the first quarter of 2020, attracting 298 metric tons, or net inflows of $23 billion, for a total of more than $164 billion, according to the report of the World Gold Council, or the WGC. That's the highest ever in U.S. dollar terms for a quarter, and the most in tonnage terms since the first quarter of 2016, after the start of the current. So the WGC expects the recent drivers of gold to persist, including widespread market uncertainty and the improved opportunity cost holding gold as yields move lower. With the Fed taking interest rates to zero for the foreseeable future, gold could do as well as it tends to perform out during easing cycles, the group writes. Additionally, multi-trillion-dollar fiscal stimulus policies to combat the economic impact of COVID-19 could improve inflationary, a development that could support gold prices in the long run. So far, inflation in the U.S. has been moderate, despite or despite earlier expectations that Trump's tariffs and the U.S.-China trade war would push the consumer prices. But I agree that the global $10+ trillion stimulus effort will have a noticeable impact on gold prices and goods and services, which could be constructive for gold. This is all looking. See, everything. It's like everything points towards higher precious metals prices. Everything points towards higher precious metals prices. It's blatantly obvious that gold and silver are a ticking time bomb. So precious metal royalty and streaming companies have cushion to weather the coronavirus. There are other ways to get exposure to gold and precious metals, of course. I believe the best way is royalty and streaming companies, led by heavyweights Franco-Nevada, Wheaton Precious Metals, and Royalty Gold, with a combined market cap close to $40 billion as of April 7th. These companies, as I've shared with you many times before, are not the ones spending money to develop a project. They simply put the capital, and in exchange, they enjoy their royalty or whatever miner produces right stream of metal supply at a fixed, lower than average cost. While they enjoy a lot of the upside potential when gold prices are rising, royalty companies share very little of the downside potential with producers and explorers when the metal is in decline. Royalty companies are better insulated from bear markets because they have a diversity of high-quality active mines in their portfolio, which is true. It makes sense. The superiority of their business model can be seen in the chart below, whereas the universe of the publicly traded precious metals miners have an average gross profit margin of 20.7% as of December 2019. The three top royalty and streaming companies had 45.7%, or more than twice the amount. This, I believe, gives them an adequate cushion to weather the coronavirus downturn. So here's 20.7% precious metals miners universe, and 45.7% is Franco-Nevada, Wheaton Precious Metals, and Royalty Gold. That's the royalty streaming companies have higher gross margin than miners. So all opinions expressed, the data provided are subject to change without notice, which is definitely true, as they might ramp up production, but some of these opinions may not be appropriate to every investor. Some links above may be directed by third-party websites. U.S. Global Investors does not endorse all information supplied by these websites and is not responsible for their content. U.S. Global Investors Incorporated is an investment advisor registered with the Securities of Exchange Commission, and this does not mean we are sponsored, recommended, or approved by the SEC. It just our ability or qualifications in any respect have been passed upon by SEC or any of the officers of the SEC. This commentary should not be considered solicitation or offering an investment product. So M2 money supply is a broad measure of money supply that includes M1 in addition to all time-related deposits, savings deposits, and non-institutional money market funds. Holding may change daily. Holdings are reported as of the most recent quarter, and following securities mentioned in the article were held by one or more accounts managed by the U.S. Global Investors. So I definitely think we have some stuff to talk about. So the first thing is how we're dumping this money into the system when we don't have money. We're running our pockets dry, but they're inside out right now, ready to burn. Right? We don't have the money to be giving out the stimulus packages and plus $10 trillion, efforts or whatever the case however they want to word it. It's just not. I get it, right? I get it, but I guess all I'm saying is it's not about how or why or what. It's just exposing the reality of the financial situation that we're in, our system. It's exposing how broke we really are. It's exposing how far in debt we really are. It's exposing what the true value of the dollar is, which in return makes gold and silver look like a very good investment, right? A very attractive investment, especially if you start looking at a recession/depression happening, or if you look at, the future of the economy. Like, what's the economy going to look like after COVID-19 passes? That's a question that a lot of people ask themselves, and it's very interesting because we don't know the extent. We don't know how much worse things are going to get. They're saying it could peak within a day or two, and then the curve could start to go back down. But who knows? Who knows? COVID-19 could take a left turn out of left field, and it could throw us way off, and it could last a lot longer. It could last another 3 years, as some are approximating. So it really is up to just letting time play out. But anyways, hope you enjoyed this video. If you did enjoy this video, if you thought it was educational, informational, or just entertaining, make sure to smash that like button. Make sure you subscribe because I post daily videos. I posted some more videos today, so go check those out as well. I definitely think you will enjoy them. So anyways, thank you so much for tuning into this video. The link to this article from Seeking Alpha will be in the description. Make sure to smash the like button. This was Silver Slayer. I will see you guys and gals soon. Peace.